Hi everyone. So this is the fourth video in the series Intro to Investing. Today I want to talk to you briefly about inflation and deflation and some of my stock picks for the week. So let's begin with some definitions. Inflation is a sustained increase in the general price level of goods and services in an economy over a period of time. Now deflation is the opposite. It's a decrease of the price level. And I'll talk to you about when it happens. Generally, in the United States, the Federal Reserve sets a target of 2% inflation rate every year, which means that your prices of goods and services are going to increase by 2% generally every year. If you're having this is associated with losing value of money because of your money is worth less every year. So if you have $100,000 in a bank account sitting earning zero interest or close to zero, every year expect that value is decreased by $2,000. So it's a loss of value. Deflation is the opposite, where prices are decreased. It's associated with less demand and less supply of money. Well, inflation is the opposite. Now, stagflation is something that you don't want to hear of or experience. It's a situation in which the inflation rate is high, the economic growth rate slows, and unemployment remains steadily high. So it's the bad of both worlds. You get low demand, low supply of money, but also inflation with high prices, and that's when maybe the currency is experiencing a lot of pressure. So we'll give some examples later on in the presentation. So how does inflation affect the stock market now during COVID-19 crisis? We're seeing that the federal government is issuing lots of stimulus money and trying to bail out corporations and companies, small businesses and big businesses, so that they're able to sustain during this difficult time. QE, quantitative easing, is a tool that the Federal Reserve has and had used before with the financial crisis in 2008 and after, and so that might be one that is going to come into play soon. No. So how does that affect it? Generally, and there might be a law that passes which would prohibit this, but when these corporations in the stock market get this stimulus money or aid packages, they do share buybacks. What that means is they get millions and billions of dollars and they decide to buy back their own share to push the price back up. So that's one of the ways that companies have artificially pushed up the price of their stock market shares. There might be a law that passes soon that prohibits these companies from doing buybacks, but until then, we should very much expect that companies would engage in that kind of behavior. So when you're pumping in cash into the system, you're increasing money supply and you're lowering interest rates. So when the Federal Reserve gets offers overnight lending to banks like at 0.05%, that's pretty much free money. And that generally lowers interest rates across the system. So if you have a savings account, a money market account, it will lower the interest that you get paid for, that you earn for that. So if you're a saver, you get hurt. If you're someone who borrows money, a borrower, it might benefit you. With inflation, there's a general increase in commodity prices, and this is where precious metals shine. And I'm going to talk a little bit about precious metals. And of course, when you have much supply of currency in the system, your dollar value is going to decrease. That's associated with inflation, right? You lose value in your money. And so the more there is in the system, the more money supply there is, the less valuable it is. That's a general concept in economics that applies really across markets. So here is the precious metals charts that I want to share with you. This is a 1-year chart, and just to see a performance, on the right hand side you see gold performance, and it was just a little below 1300 in May last year, and it's about a little over 1700, so that's a $400 increase, which translates to over 30% gain on the year. So that's a really well performing asset this year. On the other hand, you look at silver here, and it started with a little below 15, and it's ended a little below 15, almost 0% increase. It's held without any gains, but that's not necessarily a good sign, because the gold or silver to gold ratio is increasing dramatically, and generally I associate that with economic instability. We can talk about where is gold headed, and I want to do that in a separate video because I don't want to make these videos too long. But I think both are headed into higher territories, so I think they're both good investments. But silver more than gold, because silver is a lot less, um, it's a lot less bought, and the value is a lot better than gold. So I've bought some silver, and I expect to buy more because the price is really good. Looking at where we're gonna go. So that's what I was saying. But it's a good buying opportunity. It's a hedge against inflation. Now, buying silver and gold, whether it's physical or whether it's ETFs, I prefer physical, honestly. Uh, it's generally a hedge against inflation, because it's thought of as a wealth maintaining asset. So when you're having your cash value decreasing due to inflation, generally your price of commodities and precious metals would increase to offset that. And so in any portfolio of investment, I would suggest to people that they buy precious metals to protect against that in case it happens. So transitioning into the stock picks for this week, I'm watching and buying airlines. Boeing. I've actually bought both of them. I bought on Monday, I believe, United, Delta, and American again, and so I had more stocks and I added to them. I added Boeing, I believe, Tuesday this week. It was either Tuesday or Wednesday. I'm watching Lyft and Uber. Lyft and Uber made a huge jump today. Lyft got 16%, Uber something like 10%. And if you like to bet against companies for tomorrow during the opening, I think these companies' stocks are going to go down. We'll see. I might be wrong. Intel and Jupt also about 10%. I'll check the numbers with you in a second. I'm watching energy stocks today. My stocks in Schlumberger and Apache have increased 5-6%, I think. And I'm watching precious metals very closely, of course. So I'll keep doing picks of the week, and I'm going to try to keep these videos brief, to the point, and do some economic updates. So like today I discussed the topic of inflation, deflation, and please share with me your questions. I'm receiving messages of questions and suggestions for topics, so don't hesitate to subscribe to the YouTube channel and share with me those questions. Let me share with you real quick here some of the things I was talking about earlier. So look at here, this is the Dow to gold ratio over 100 years or so. You can see that this is how many ounces of gold you need to buy the Dow, and it goes up and down, but generally down when there's an economic crisis. Look at here, this is the kind of the 2008, and then the aftermath of it until recovery kind of started to show. So we were up and we're going down, so if I were to guess, this is going to continue to go down a little bit. This is what I was talking about in gold to silver ratio, which not necessarily is a good news that we are on a very high ratio for gold. So again, the ratio decreases when there is economic instability. So, and it increases when it goes up, and then there is a trend to go down with uncertainty. So we're going through that instability right now. I'm going to guess that this is going to go down a little bit too, if my thinking process is correct. And that's my understanding. So you can see here in 2000, following the 2008 crisis, it went down. This is kind of the painful recovery time. This is the bottom, and then it went back up as the recovery started to strengthen. So that was all I want to share with you. We can look here real quick at the stocks and how they did today. Today is the 7th of May, and well, like I was saying, Lyft got 21% actually increase. And Uber got 11%. I'm gonna guess tomorrow, Friday, they will open on a lower note than that, because their fundamentals are not that great, at least for the time being. And I'm hoping for airlines to increase, because I think they're a huge buy at this point. Now, someone asked me about Buffett and why he dumped all of his stocks for airlines, and I think honestly that doesn't change me a bit about my strategy in pursuing airlines at this point, because they are a steal, and I don't believe that any of them is going to go bankrupt. So that's my opinion. Feel free to disagree or agree. I would love to hear yours. But that's all I wanted to share with you today. I'll catch you in the next video. Thank you all.